Hello, I'm David Taston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a surprise jump in factory output in Europe. But first, a regular survey of consumer expectations done by the New York Fed in February points to rising inflation there and growth in home prices, earnings, income and spending. Janet Yellen reviews her policy settings later this week, and data like this will undoubtedly influence her. No hike is expected this month, but expect signals that gradual rate hikes are on track for 2016. They may also be considering this. Delinquencies on bottom-end American car loans have climbed to their highest level in almost 20 years. The level of subprime car loans overdue by more than 60 days rose to above 5% in February, according to ratings agency Fitch. This is higher than the GFC peak and was the highest since October 1996, when it was almost 6%. And another ratings agency is calling out China's strategy. China is bound to fail in at least one of its three conflicting aims to achieve growth, institute reform and maintain stability, says Moody's, as it engages in a war of words with Beijing over the country's economic prospects. China's three policy objectives formed an impossible trinity, the ratings agency said in a research report recently. Beijing could at best achieve only two of those objectives at one time. In Europe, industrial production grew at its highest rate in more than 6 years during January, driven by a sharp increase in output from Ireland. Production rose by 2.8% compared with the same month a year ago, reversing negative readings in December and November. Month on month, it rose 2.1%, and that is the highest monthly rise since September 2009, when output climbed almost 2.3%. Irish production jumped a remarkable 12.7% month on month. One of the more underreported aspects of the falls in our OCR and the parallel dive in our 90-day bank bill rate is that credit card rates have not moved, and certainly not given back any hikes banks claimed they needed when the OCR was rising. Now credit card users are about to be stiffed again. In Australia, ANZ is withdrawing some significant benefits from their card reward programs, and they are not the first to do it over there. And it is a trend that may well surface here. In New York, the benchmark US Treasury 10-year yield is slightly lower at midday trade today at 1.96%. The oil price is also lower by $1 at $37 a barrel in the US, while Brent is at $39 a barrel. American crude stockpiles continue to mount, and Iran maintains little interest in a global production freeze. The gold price is falling as well, as now at $1,244 an ounce, and the New Zealand dollar is following all these commodity trends down too. New Zealand dollar starts today at 66.8 US cents, 88.9 Aussie cents, and at 60.1 euro cents. The TWI index is back down to 70.7. I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.